look at how I actually got this particular entry on this trade usdjpy, and I'm going to walk you guys down through with it, so stick along to follow me. So now I want to go to a different pair so that I won't remove this particular one or remove this particular shot. Okay, so this is my session for the penning and the rest. Okay, so we first of all go to the higher time frame. So from the higher time frame, we have to actually decide where price is going to. So normally when trading, you need to understand two things: price seeks liquidity and price looks to fill up fair value gap. So this is what I just labeled here. Price actually pushed up from a fair value gap and swept liquidity from that zone. So now we are actually going to go up from internal to external. Now price has gone for the internal range liquidity, and now we are going for the external range liquidity. So now price is going up to fill up, first of all, the fair value gap we are saying here. It's going to fill up the fair value gap. So now we are marking out our external range liquidity, although it's quite far, but we just need to like mark out something, the targets where we are expecting price to go to. So now moving forward, going back to, we are still on our higher time frame. This is the weekly time frame. Understanding that before last week, the previous week candle closed with an indecision candle. So now we are in the daily time frame now. In the daily time frame now, it's telling us the price is actually likely to go up. Reason being that that zone here, which is labeled as an order block, didn't actually break structure. If you can look below there, we see the sweep and not a break, a sweep. So now I'm going to cancel it, indicating that that particular zone now is a no-go area. Thereby, you're not expecting to trade from that zone. So anybody trading from this particular zone now has likely be taken out, or is likely possibly going to be taken out, because that zone now is not a strong zone. It is labeled as a weak high, So now going to the 4 hours time frame. So okay, before that, this is me marking out my FVG. This is the FVG we are trying to fill up first. We will fill up the FVG before we can think of what to do. Sometimes it fills up to the brim and sometimes it doesn't fill up. FVG stands for fair value gap. Okay. So now we are marking that particular zone as a no break of structure because it didn't break with a candle body, and then meaning that the high that caused that low to go down is a weak high. So now having marked the weak high, so now we are on the 1 hour time frame. So now I'm going to show you how I was able to like spot out that particular zone. So now this was the first break of structure that happened last week. And from that break of structure now we saw that there was a block. So now we classify this block as a breaker block now. So price actually triggered from that block now and went upward, meaning there was going in the price that the order flow here was telling us that price is no longer looking to sell. So now another break of structure also occurred, and looking at the previous one, we saw a pattern that showed us the price is actually taking its entry from a breaker block. So now we marked out the previous breaker block, the next breaker block, and from there we saw that there was an inducement that was being served into that breaker block. So there was no point for us depending on the other block, because if you look at it below, the other block is quite downward. So now that was where we marked our entry, and we traded upward into the weak high, which the price